Your reaction to what we heard last night then? The delay seems to be neither long nor short. What does that mean for UK business, do you think?
Well, I think the first thing that business wants generally is some degree of certainty, but not a certainty of a crash out. They want a certainty we won't crash out, but a certainty we'll move forward with some kind of pragmatic solution that Parliament will align, support a means, a process by which we can leave if that's what we want to do.
And where do you think this heads next? It does seem so. It seems amazing, Mike, that there are so many possibilities still on the table. OK, so no deal has been taken off the table for this week, but could still happen. We could end up with a leader of the Conservative Party who wants no deal, of course. On the other hand, you can see a path from here to revoking Article 50. Do you have any sense of where this heads?
Look, I think at the moment the possibilities seem to be, if Parliament is to align around the Prime Minister's deal, obviously you could leave very quickly. That would involve, a 5-year, effectively a transition arrangement where we'd effectively stay in the customs union, the single market. I think business at a pragmatic level would be willing to live with that. Obviously, the other alternative which is being discussed is we actually come up with a slightly different deal where we stay in the customs union. On a permanent basis. That would obviously be, much preferable from a business perspective, because it would allow us to continue with the trade treaties we have with not only the European Union, which is 45% of our trade, but with those other countries with whom we trade based on EU treaties. And the totality of this trade is about 2/3 of our total trade. And it's very clear that we will not get the kind of deals the EU has with the likes of Japan, Canada, South Korea and others than we currently have, because we do not have the negotiating power of 500 million people. Therefore, frankly speaking, to stay in the customs union is at a minimum the most sensible answer for the economic welfare of the country and indeed of the European Union.
Is it useful to divide up the economy into goods and services when we're talking about a customs union, Mike? Is there a way that we have a customs union on goods and then on services are able to go around the world doing our own trade deals? Is that the nuts and bolts of what could be agreed to between the Labour and the Conservative Party?
Well, look, I think there's a lot of mythology out there. It is a complex area, but in very simple terms, what's critical in the short term is to protect our manufacturing jobs, these European supply chains. Damage has already been done to our economy at a very significant level. We're seeing reduced investment. We're seeing layoffs in the motor vehicle area. We're seeing decisions to invest elsewhere in terms of creating different supply chains that are not dependent on the UK. All this uncertainty is very unhealthy. If we stay in the customs union, the single market doesn't generally cover services, so we'd still be able to, enter into negotiations from a services point of view. Obviously, single market creates more of a level playing field across Europe. And, it's quite evident the vast majority of business would much prefer we hadn't embarked upon the decision to leave the European Union, stayed in the single market and the customs union, but at a pragmatic level, I think people would see that at least staying in the customs union protects our trade, protects jobs, and hopefully we could get on with it and avoid any further disinvestment that's already occurring.
Mike, if we do see another general election as part of the process that unfolds for the UK, from a business perspective, which party would you look to be more business friendly in the UK right now?
Well, we have an extraordinary situation. The country's completely divided. Both political parties are completely divided. I don't think a general election would solve anything, because it would go down some rabbit holes where different points of view would be there. I think business is deeply disturbed that we don't seem to have a Conservative Party that is really supporting business overall. We certainly have, and you have a situation which was encouraging, actually, which people need to, so maybe that's a way forward. We had actually the General Secretary of the TUC, Francis O'Grady, and the Director General of the CBI, Carolyn Fairbairn, appealing together to Parliament to really understand the damage that's being done to our economy and come to a sensible, pragmatic solution based on compromise at this stage, as the European Union is showing us the way in terms of what they agreed last night.
Have you been surprised at how resilient the UK economy has been, Mike? Reaction to some of the data we've had out recently, that it's very politically charged often. Those who want to find resilience despite Brexit point to that. Others suggest, well, it's stockpiling. What's your assessment?
Well, I think that, look, there's a huge mixture of factors in all of the events that we're seeing right now. So we still have, very relatively low inflation, low interest rates. We have high employment, but in an economy where productivity is still low and reducing and on relatively low wages. So it's ticking along. The big concern that business had and has had from the beginning is the impact of Brexit takes a long while to really hit you day to day. And the conservative estimate shown probably our economy, is 3% or so less than it might have been if we decided to stay. However, it's also clear that other things are out there, the concern about a global trade war developing, the China-US situation, the concerns about what in a number of different areas of the world, what that might lead to, a sort of slowing down of global trade that we're seeing. So there are different elements around this. But so far, and it is only so far, we've not seen yet what will be the inevitable impacts of a kind of hard Brexit or a semi-hard Brexit. But we will.
Mike, I just want to ask your take on what the problem is here in Europe versus the U.S. when it comes to banks. The U.S. has had a little bit longer to recover, I suppose, from the financial crisis, but it's been such a long time. Why can't European banks get recapitalized, get stronger, and be in better shape?
Yeah. Well, I think the first thing to remember is the Americans acted very, very quickly to pump liquidity into the banking system immediately, without condition, except no dividends, no bonuses, get your balance sheets right, and then we move on. And basically they did that, and they've got a very large marketplace with dominance by a small number of players in the biggest market in the world, one of the biggest markets in the world. In Europe, I think it's clear that in certain parts of it, we were much slower to recognize some of the problems, much slower to increase liquidity and capital. That's now been done in most areas, so I think there is a much stronger liquidity and capital. But that strong capital of itself drives you to having to have greater efficiency, because your returns that you need to make to your shareholders, to the markets, to your bondholders, require you to be much more efficient, require you to use technology in terms of eliminating legacy systems, moving to new, which is expensive, but when it's done, obviously, can result in significant layoffs of people and reduction of costs. And that's what this is about, because the economics of it don't work unless you can really get a return on capital that recognizes the risk that you take as a banks. And in some parts of Europe have been slower than others, as we know, to deal and recognize some of these issues. So that's the combining effect we're seeing.